Hey traders! Today in this video, I will reveal the top 3 high win rate trading strategies that will significantly increase your chances of profit. So let's get into the video without wasting time. Our first strategy is a moving average crossover with the RSI indicator. Indicators such as moving averages and relative strength index are mathematical technical analysis tools that traders and investors use to analyze the past and predict the future price trends. A moving average crossover often indicates an upcoming trend change. Applying the moving average crossover strategy to a price chart allows traders to identify areas where the trend is changing direction and creating the potential trading opportunities. In this strategy, we will be using 9 and 21 exponential moving average, but you can use any combination. Here are some inspiration to help you. You can use the 14-period RSI indicator as a trend tiebreaker. We only look for bullish signals when the RSI is above the 50 level. And when the RSI is below the 50 level, we only look for bearish signals. Rules for long position. Number 1. The short-term EMA crosses above the longer-term EMA. It means that the short-term prices are rising over the longer-term prices. It signals bullish momentum. Number 2. RSI should be above 50 level, which means it would have been fine to follow a bullish crossover signal. RSI is a filtering tool, so if the moving average crosses in a bullish signal, but the RSI is below the 50 level, I will not open a long trade. Rules for short positions. Number 1. The short-term EMA crosses below the longer-term EMA. It means that the short-term prices are falling over the longer-term prices. It signals bearish momentum. Number 2. RSI should be below 50 level. Let's see some examples. Here in this chart, the RSI is trading above the 50 level, which means that it would have been okay to follow the bullish crossover signal. Next, the short-term EMA crosses above the longer-term EMA. It means that the short-term prices are rising over the longer-term prices. This is a bullish signal. Similarly, in this chart, the RSI is trading below the 50 level, which means that it would have been okay to follow the bearish crossover signal. Next, the short-term EMA crosses below the longer-term EMA. It means that the short-term prices are falling over the longer-term prices. This is a bearish signal. Our second strategy is momentum divergences. Divergence is one of my favorite tools, and I have used divergence in many of my trading strategies over the years. How to identify and trade divergence? Now let's see the best indicators you could use to identify divergences. The relative strength index is a powerful indicator and one of the most reliable oscillators when used correctly. A great use of the relative strength index is to search for divergences between the RSI and the price of the stock. How to trade divergence? Usually, an RSI divergence means that the RSI indicator is moving in the opposite direction to the price. Therefore, as the price moves, the RSI tells us in advance to anticipate a change in direction. We recognize 2 types of RSI divergence. Bullish RSI divergence. We have a bullish RSI divergence when the price action is moving to lower lows and lower highs, while the RSI indicator is making the opposite higher highs and higher lows. Bearish RSI divergence. The bearish RSI divergence is opposite to the positive divergence. It applies to bullish trends where the price closes higher highs and higher lows. However, the RSI accounts for lower highs and lower lows. Entering the market on the RSI divergence pattern. Your entry point on the RSI divergence should come after the price action, and the relative strength index satisfies certain conditions. Number 1. You need to identify that the RSI is displaying a divergence. For this, you will need to confirm that the highs and lows within the RSI line are moving opposite to the price action. Number 2. After you confirm the divergence, you will need to identify the presence of a price reversal. Not every divergence on RSI is a valid signal, there will be some fake signals. Thus, the trendline confluence factor works well in this scenario. Now, a trader would simply wait for a strong breakout of the trend line before looking for buying opportunities. Our last strategy is trendline system. This chart shows an overall primary uptrend, and within the uptrend, the trader would look buying opportunities. With the help of trendlines, we can identify consolidations effectively. When you can connect 3 or more highs and find a downward sloping trend line in an upward trend, a bullish breakout often signals a trend continuation. This chart shows periods where the sideways consolidation was defined by a downward sloping trend line. And each time, the breakout signaled the continuation. Moving averages are an ideal filter for trendline strategies. Moving averages work best during trending phases, and so do trendlines. In this chart, I added a 50-period moving average to the chart. For trendline breaks, the moving average also confirmed the trend direction. Not only was the price trading below the moving average, but the moving average itself was also pointing downward, confirming the trend direction once the trendline break happened. Furthermore, I do not recommend that you blindly copy those trading strategies, but use it as an inspiration. Test out different ideas, see which one feels natural to you, and then figure out how you can tailor it to your personality and trader profile.